August 2020, we're looking at the numbers compared to August 2019, and seriously, it's making my eyes water and giving me butterflies in my tummy, because when I just don't think the market can get any tougher, it just seems to get tougher again. And it is, I've just never seen it like this, and the numbers from the reports confirm kind of my experience out there on the front line, and also those of my colleagues too. We're seeing pretty remarkable activity happening, pretty remarkable prices, large numbers of offers on properties, and according to the realestate.co.nz website, we've got the lowest stock that we've had for 13 years. So that is, you know, that's obviously not just my opinion, that's the data. So yeah, supply is eye-wateringly tight out there. I have juggled around the order of things that I present the data into a way that I hope is a little more kind of logical, perhaps, and starting with the headline, which everyone wants to know, of course, which is what's happened to prices. So median sales price, and remember, this is the Wellington region, not just the city. August 2020, 720,000 versus 638 and $500 in August 2019. That's a difference of 13%, and that's a little higher than we've seen in the last few months. It's often been kind of 9, 10, 11%, so 13% is quite a big jump. If you look here at the graph, again, the blue chart is the monthly results, and the red line is the 6-month moving average. So the 6-month is basically a smoothed result, because from month to month it can go up and down a little bit. There's a bit of variance there. And so what I've been saying in the last few months is that those 3 months have been lower on the median price than the previous 3 months to that. Excuse me while I let someone else in. And what we're seeing this month is that the median price has gone up again compared to those 3. So here we are, that's August, that's July, June, May, April, and so on. So April, ironically, April was when we were in lockdown, but that's when the median sales price results came through strongest. And in August, we're just a tad below the level that was achieved back then. So although the intervening 3 months have been a bit lower than the previous 3 months, this month in August, it's come in with a stronger result again. So I was beginning to wonder whether we're seeing, is this a flattening off of prices? And indeed, August results is not out of kilter with the last 6 months overall, but certainly higher than the previous 3 months from August. So yeah, it looks like prices have kind of flattened off, but I can promise you, in the office at Low & Co at least, it certainly looks like the prices that are being achieved is anything but flat, and the amount of competition for listings is remarkable, really quite fierce. So yeah, median price continues to be strong, up 13% compared to August 2019. Sorry, my computer's not working. There we go. So this is how many new listings in the month. And this is not inconsistent with what we've seen in the last couple of months also. In June and July, we saw a strengthening in the number of new listings when compared to 12 months prior. So about 20% or so. June and July were roughly 20% higher than the previous June and July. In August, 27% higher. So you can see there's 626 new listings in August versus 493 in August 2019. That's a big increase, 27%. So this is telling us that we're seeing more new listings coming to the market now than we were seeing 12 months ago, and that's been consistently the case for the last 3 months, June, July, and August. So if you can see my cursor there, there's the August result there. And 12 months earlier, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So there's the August 2019 number. That's August, that's July, that's June. This is August, July, and June. So these 3 results here, all higher than the 3 months in 2019. Now, does that mean that overall there are more people selling properties in Wellington or putting their properties on the market in Wellington than a year ago? Obviously, in these 3 months, yes, but remember that in April, which is this month here, of course, we were very, very low because we were in lockdown. You essentially couldn't list your property for pretty much the whole month. And so that month was very much lower than the previous April. And so when you add these all together, perhaps the results we're seeing in these last 3 months compared to the same 3 months in 2019, we're up, yes, 20 to 27% compared to those times, but maybe that's just the overflow from April that decided not to sell or couldn't sell. Then they've been holding back because they weren't sure, is the market going to be strong? Is it a good time to sell? Now they've seen plenty of evidence that indeed things are selling and selling well and achieving good prices. And so they're given confidence that they can bring their property to the market after all. And so perhaps what we're seeing is not so much more people wanting to sell, which would be evidence of moving away so much from a seller's market into a buyer's market, but we're just seeing the people who wanted to sell in April deciding to sell a bit later, and so it's an overflow. It's a bit of a catch up from the low month in April, and that's what I suspect may be happening. So on the overall moving average basis, the red line, you can see here that even though we've been up 20 to 27% in the last 3 months compared to 2019 on a monthly basis, on a 6 monthly basis, we're still the lowest we've ever seen. So for the last 6 months, which is these results here, it is as low as it's ever been in terms of the number of new listings. So it'll be interesting to see in the next couple of months, does this start to tail off compared to 12 months ago, which of course is springtime. I mean, now it's the season for lots of properties coming to the market. So it'll be interesting to see, does this red line start to trend upwards again and start heading north, or are we going to stay low on that basis? I'm just let someone else in. Yeah, so as I say, sing out anytime you've got any questions. But yeah, so more listings coming to the market the last few months, but on a moving average basis, it's still very tight. So how long is it taking to sell properties? And again, you see here that we're back down to quite short. So 29 days versus 33 days in August 2019. And you can see again on the blue results there, this one here is May, June, July and August. So obviously May is just reflective of the lockdown. You couldn't show the property, so it took a long time to sell the property at that time. And then we've come back straight back down to the norms that we were seeing immediately before lockdown. We were all hovering around 28, 29, 30 days, and we're back down there again now. And indeed, compared to 12 months ago, where it was 33 days, we're down 12% or 4 days. So indeed, that's again reflective of a strong market. Inventory in terms of number of weeks. So yeah, back down to very tight levels indeed. 6 weeks worth of supply versus 7 weeks in August 2019. And again, you can see that in the blue chart here. It's been some time since we've seen inventory of 6 weeks. About a year or so ago, we saw it. Before that, it has been a number of years before we were back down to 6 weeks here. The lowest I've ever seen it, 5 weeks, and this is sort of 2017. So 6 weeks, a very, very strong result there, showing we're very undersupplied. This is essentially measuring the balance between the supply and demand. So a very short amount of inventory means that it's taking only 6 weeks to sell everything we've got on the market today if things carried on selling at the same rate and if nothing else came to the market. So, and you can see there that from 2017, when we were right down at these very low levels, since then, the average inventory has just slowly been creeping up, very slowly over time, with a bit of a dip down here, but then we were increasing again. So now heading back down again. So yeah, again, it'll be interesting to see if this is maintained, or indeed if we do see a lot more stock continuing to come to the market, then maybe this number will start to creep up again. And the gross number of listings, I mean, again, it's incredible that we continue to see declines, but down 18% compared to a year ago. And as I started out this these slides at the start here, I mentioned that it's the lowest amount of stock we're seeing on the market at the moment that we've seen for 13 years. Just let someone else in. And so, yeah, again, you can see the graph here. It's really very, very low levels at 1194. And for Wellington City, I think I checked yesterday or something like that, and we were at something like 410, 415 listings in the Wellington City. That's everything from Tawa through to Seatoon. That includes sections, it includes properties that haven't been built yet. So the number of actual finished properties that are on the market now is even less than that. And going back a number of years, back to sort of 2000, 2013, 2014, before our latest boom sort of started, I've been tracking these numbers for quite some time, and I saw it hit as high as something like 1,400 in Wellington City. So we're now only just a bit over 400. I've seen it as high as 1,400. So yeah, 400 or just a bit more than 400 in the city is just incredibly tight indeed. And so that helps to explain why, if you're a buyer in the market today and you're out there looking for something and you're serious about buying and you need a place to live, it is approaching absolute desperation point out there. There is so little to choose from and so many buyers out there competing with each other. I had a colleague today who had a property closing, and I don't know how many offers she got in the end for it. But I mean, it's an absurdly busy it was. She was over 30 offers for one property, and so this is just pure craziness. How can you possibly win when you're competing with 30 other people who are making offers at the same time? And in that sort of environment, it's easy to see why prices rise, because the only way you can win is by paying technically too much if you want to beat 30 other people. And so that's how the prices, go up. So yes, down 18% on the gross stock levels compared to a year ago. And you can see again, that red line, it was hovering for several years between 1,500 and 2,000, or not even 1,500, 1,600 and 2,000, depending on the time of the year. And the last 12, 15 months, it has been creeping downwards and getting tighter and tighter. So yeah, more evidence of a very strong market. The supply that is coming to the market is selling, and selling promptly. And so, yeah, no sign of any let up at the moment. 766 sales versus 581. So compared to the number of new supply coming on the market, just to recap your memory there, so we're up 27% on new supply and up 32% on number of sales. So the increase in the number of sales is even outstripping the amount of new supply, or the increase in the new supply that's coming on. And so, but again, is that just buyers catching up from when they missed out on in April or in May? Because there you can see the number of sales taking place in May after lockdown, very low indeed. And so there's a bit of a recovery, a bit of a bounce back there. Yeah, so both new listings and sales in the month up significantly. So just back to the summary. Sorry, guys. Is price growth slowing? The numbers technically would show that prices in the last 6 months have been flat, but my sense there in the office and looking at property selling, both in the ones I'm dealing with and my colleagues, it is not slowing. It certainly does not feel that way with the amount of competition that we're having for each listing from all the buyers. So the numbers are saying that price growth is slowing, and you can't argue with those numbers. But the environment out there, the sense of things out there is that the competition is absolutely fierce. And I'm sure if you talk to a buyer who's been in the market for 6 or 12 months trying to buy something, they would say the same thing. The duration to sell is low at 29 days versus 33 12 months ago. It's certainly below average. Stock levels are the lowest we've seen for 13 years, as I keep saying. there's no market pain, no price pain from COVID still. As I've said before, the only pain, I'm sorry to say, is being borne by the buyers, and no let up for them, no really good news signs for them so far, I'm afraid to say. Obviously, on the other hand, that is good news for sellers. And even though prices are very strong and the competition is pretty fierce, I still firmly believe that the long-term fundamentals do remain firm. I've said before, I'm in the market to buy. I have bought recently, so I'm putting my money where my mouth is. So if you do find things that work for you, if you can afford it, don't let that stop you from making a purchase. All of the economists who 4 or 5 months ago were predicting terrible market pain from COVID and significant price reductions have been eating their humble words and have been revising their forecasts into more moderate price falls, or some have even been now saying we expect to see market prices rising. I mean, I listen more than anyone to, the economists I pay most attention to, of course, Tony Alexander seems to get it right more than the rest. Very, very hard to get things right in forecasting game. And he's suggesting that we will have perhaps a bit of a flat period, or very slow growth, or very small reduction in overall pricing. But next year in 2022, he's predicting firming of pricing again. So you can't rely on those predictions necessarily. But as I say, if the property works for you, if you can afford it, if you like it, don't not purchase out of some concern that prices might fall. If there is going to be falls, I can't see them being significant at all. So look, that's all I've got today, folks. Thank you so much for checking in. I hope that's interesting. As I say, by all means, just sing out if you want any help with anything at all on real estate. And see you next time. Have a great evening, great week, and a great month, and see you soon.